Hi, welcome to episode 25 of METACO Talks, a series of live conversations with the people at the forefront of innovation around decentralized finance. Today, the title of the episode is Capitalizing on Tokenization. And to discuss this, we have a special guest, Rajeev TUMMALA, Product Director in the Digital and Data Team at HSBC's Markets and Securities Services business in Singapore. He's engaged with financial markets, infrastructure providers on implications of DLT for security issuance and associated asset servicing. Now, Rajeev has worked with broker-dealers and security service technology providers for over 20 years in India, Japan, and Singapore. And prior to HSBC, he was with Bank of America, Merrill Lynch for 10 years. And since 2015, Rajeev has focused on innovation, applications on artificial intelligence, AI, and distributed ledger technology on security services, and has had responsibility for engaging with fintech startups related to AI and DLT. Rajeev, great to have you here. Welcome to METACO Talks.
Thanks a lot for having me. Since I'm looking forward to having a great conversation.
Likewise, great. Well, let's kick off. I mean, I think a great way to start would be, how did you personally get involved in the digital asset space?
Yeah, so it's a very interesting story. I used to head reconciliations technology when I was at BAML, and as a pure technologist, one would think that if technology was in place, you should actually not be doing any reconciliations in the first place. And instead of having reconciliation systems and probably a few hundred staff performing reconciliations, and we were looking at one of the primary reasons for having reconciliations was multiple ledgers. And I was just on a quest to see what else is available in the market. What is the emerging trends? And this was the early days of me looking into the new trends and innovations that are happening in the capital market space. And one thing led to another, and I was introduced to the concept of distributed ledger technology and Bitcoin that was powering DLT. And then I was exposed to the technology because I was trying to solve a capital markets problem in the 2014-2015 timeframe. And then, once you get in as a technologist and as a domain expert in capital markets, it's always fascinating. The digital asset space is super fascinating. You can't leave. You find so many applications, and that's how I got into the digital asset space.
Pull down the rabbit hole, as they say, basically. Right?
Yeah, and then that's it.
It's funny, we've had so many discussions when we go to clients about the blockchain. How do you reconcile? And it's kind of stop there. Wait a second. There's only one source of truth there. So. Yeah. What about HSBC? How do they see the potential for digital assets?
Yeah, it's a very pertinent question. I think how does institution like HSBC, that's probably one of the world's largest custodians, look at digital assets? For us, digital assets is much more than I think crypto assets. So it's a bigger play. We also look at it as simply transforming the way assets are represented. And we have been custodian for many, many years. So we knew and we managed assets when they were represented as bearer assets in physical paper form. And, they were stored in, vaults inside the bunkers. And from there in the late 90s, or, you can even say early 80s to all the way to early 2000s, the great transformation of asset representation happened. So this is not the first time. That's what I want to tell the audience, that asset representation is being transformed. There was another cycle before where assets represented on papers were dematerialized and they were converted to electronic forms. And that's how you own shares today, stocks today. And Apple stock is an entry in a ledger or in a database somewhere in your name, and someone's managing that. And we see this as a natural progression of asset representation. So digital assets are a natural progression of asset representation. We are very interested in this field. We have a lot of work that is currently going on. And one thing, Seamus, that we also know that what happened when the assets moved from paper to electronic or dematerialized was there was an explosion of issuance. There was an explosion on ownership. So trading exploded. I think we have some numbers, and when the assets moved from paper to dematerialized, the volume in the US grew like 80 times, and ownership went through the roof, right? And more importantly, innovations like ETFs were made possible, right? So you got to basically look at what happens when the asset representation changes. And I think that it's exactly the same. And if any, it is going to be even more impactful because we are a lot more connected today. The world has internet and everybody talks to everyone else today rather than in the late 90s. Connectivity has increased manyfold. So digital assets will have a significant impact on how capital markets work, what it means for inclusion, and more importantly, I think, how many more innovative products are going to come out on top of tokenization and digital assets.
And I think it's a great view of how to define the relevance. And I think it's underappreciated basically what we've seen before and how it's impacted and how it can happen again, or how it's exponentially more this time around. And as you look at that space, or as HSBC looks at the space, is the move here beyond what you've described? Is it also being driven by customer demand?
There's a lot of interest from customers, right? So because, in 2016, 2017, 2018, you could basically dismiss this as a fad. And then there was a winter, and then it came back up again. And I think institution, and I'm sure, right? The survey after survey after survey, only one thing is very, very certain, right? The direction, the interest from the institutional investors is only increasing. And that means we'll have to pay attention. There's definitely a lot of customer interest on digital assets and what it means. And often looked, again, right? So one of the facts that digital assets bring along is the power of smart contracts. And in today's world, DeFi is not possible without smart contracts. And smart contracts would not be possible without tokenization. And what tokenization simply does is it standardizes how an asset is represented. Most of the inefficiencies in capital markets today exist because amongst the participants, there is no standard way of representing an asset. Now, is that standardization ERC20, ERC1400, or something new that comes along the way? That's fine, right? We will sort it out as time progresses and the best standards tend to win. And to draw parallels from the previous world or the existing world was the main efficiencies during the paper-based existence of assets was how information was exchanged. And we came up with standard messaging, Swift and Fix to address those things. And now, if you basically extend that, the inefficiencies exist not because of lack of messaging standards, but primarily due to lack of standard asset representation. Even in a large organization like HSBC, how the front office represents the security is different from what a middle office does and what back office asset servicing does. That yields a lot of inefficiencies. And through DLT and public blockchain, what you are actually bringing out is a global standard for representing assets, no matter which institution you are and what function you perform. And that's fascinating to me because tokenization then yields smart contracts, then yield, again, software is composable, right? So you sort of make a lot more innovations by composing a lot of other smart contracts. So, a lot of DeFi smart contracts are simply relying on the fact that underneath them, there is more code that someone else has written, which they can use and create something more useful to the ecosystem. And that's where I think a lot of institutional interest comes from. It yields efficiencies. It becomes a lot more efficient. And you're also, at the same time, you're removing risk because a lot more automation is coming through. Now, can you represent different kinds of assets? Can you make illiquid assets liquid? All of these are positive externalities of standardization, smart contracts, and automation.
Super interesting. I don't think people outside the industry are probably aware of just how, let's say, fragmented things are internally at the firms.
That is the advantage of working in the industry for 20 years, I think.
So, why don't we dive in a little bit in the tokenization side? You mentioned around the different types of asset-backed tokens. I mean, how would you see those now and maybe looking forward?
So I think, like everything, you got to familiarize yourself with the concept of tokenization. And, there'll be two types of institutions, right? The new entrants that would come and try to tokenize something that was not tokenized before, right? So you are, the watches, the exotic assets, the Formula One cars, you try to bring on new type of asset class. And that I think is firmly in the realm of the new entrants, right? So they put on governance, they try, they experiment. The traditional institutions or the incumbents would try to tokenize stuff that they understand well, right? So which would be your, traditional as securities and securitization, maybe derivatives and structured products, you will see, but the underlying tech is the same, right? Whether you're talking about crypto, DeFi enabled crypto, or new exotic assets or traditional assets, all the underlying tech is the same. It's just that incumbents and new entrants all come from a place where they are comfortable with. And that's what's going to come through. Now, let me take the asset-backed token example of the traditional securities. Right? This is where you will need a bit of regulatory clarity. There needs to be some kind of regulatory collaboration across different jurisdictions, because you need to transfer value that is represented in tokens, maybe sometimes cross-border. You need financial market infrastructure. So there are a lot of moving parts, and we know that SGX in Singapore is done market node. ASX is doing their huge replacement of depository technology. Hong Kong Exchange is doing Project Synapse for T0 settlements. In Europe, SDX is coming up, and SIX is one of the main sponsors, and we have seen Deutsche Börse coming up with T7. So there's a lot of activity currently going on, and I would say that this is like an installation period, right? So everyone's trying to install something into the ecosystem, bring together that minimum viable ecosystems. So I do believe that in the next 1 or 2 years, you would see a lot more progress, but still compared to, I think, the traditional way of representing assets, it's still on ramp, right? It's basically ramping up. The ecosystem is ramping up. Looking into the future, maybe, sometime between 2024 onwards, you would see mass adoption, right? So efficiencies would come to the fore, and then that should incentivize enough traditional players to sort of to adopt. And I wouldn't say they would start then. Everybody has started. And if somebody says that you have not started the digital asset journey, tokenization journey, and you're not thinking about tokenization as a service, I don't think that, I would be really surprised. All large institutions are along that curve. It's about, again, right, a lot of us realizing as well, what is the underlying protocol that can be mutualized, and what are the things that we can do unique using our balance sheets. I think there is some way to go there. Because you don't want to be writing an equivalent of an email system or a browser inside a bank for digital assets. Right? You've got to basically let that ecosystem come through, and your job is to write using your own unique strategy, aligning it to your strategy, building out products that can ride on those rails. And I do think there is work to be done. Right. So today I think a lot of institutions are trying to do the same thing internally, but maybe in 2 years' time, and this is where the public blockchain is a wonderful example, right? They are showing how things can be mutualized, and how can you write, better things on top of existing infrastructure.
I mean, I think you alluded to some very interesting points. I mean, network. Let's talk a little about networks. I mean, what are the critical success factors around tokenized asset use cases? I mean, is collaboration. From my takeaway from what I'm hearing, collaboration is a critical element. Is that right?
Yeah. Collaboration is a critical element, and I do think governance comes through collaboration, right? How do you ensure that the quality of assets is consistent in your asset network? Look, end of day, the participants and the asset quality is critical for a network success or a failure, right? So you don't bring on quality, because asset networks at the end of day, you need to have quality assets that attract both issuers and investors. And the participants in that particular network are there to facilitate and sort of increase the credibility of that network. But one defining factor of the new age asset networks is going to be the quality of assets. The more quality of assets, I think the faster they can scale. And it is up to the network participants to source and distribute assets that can be issued on that particular network, and the quality of the assets would basically determine the success or the failure. And how do the quality of this assets are directly correlated to the participants? So this is where I think there's a bit of a chicken and egg problem. The quality of the assets would not be there if you don't have quality incumbents, and if you don't have quality incumbents, you would not get quality of assets. So there is a bit of a cold start problem sometimes in some asset networks, but there's always a need to put sparks, right? So that's where I think the minimum viable ecosystems, the kind of work that we did with the SGX and temasek sort of comes into play. That is, you need a few participants to come together and try to pull in a use case or two, and then sort of contribute to its scaling.
Agreed. I think there's always been the difficulty around token. Well, one of the, as you said, the chicken and egg problem in tokenization is you need liquid secondary markets to attract issuers and investors. It's a very circular sort of story. So on that, can you define a little more around when you talk about quality and also the quality of the asset market networks, and also how do you think will we see emergence of new types of asset networks as well?
So I'll take your second question first. I mean, I have no doubts on the emergence of new types of asset networks, right? So one thing that tokenization sort of contributes to is fractionalization, and that means there are assets today, and everybody talks about bonds because bonds have huge ticket sizes in the traditional world, and nobody can own. A lot of people can't own, and you basically go through fund structures and similar. But the fact that you can own any asset in a very in a tiniest form is going to be responsible for creation of asset networks, right? So now and one of the other things also Seamus is that the barrier to entry in the crypto world is somewhat low, right? It's not high. Again, you can basically call that out because of there's no regulatory oversight yet, right. And this is where newer types of assets would definitely evolve. There is a self-governing element in this world as well. But now that is where I think the challenge is, right? The self-governing mechanism should trump the quality of or like low quality, right? So if the self-governing works, then the low quality assets would come. But when I mean quality of assets, now going back to your first question, what we are talking about is does the asset yield what it promises to yield, right? So most of the assets are nothing but promises of cash flow in future, promises of capital appreciation in future, and how can you sort of and those assets come from an issuer, right? An issuer that is in need of finance, in the traditional world, and that's how there's going to be I think a bit of a friction, if I may say so, in attracting or not attracting. But then there is also a balancing factor of self-governing within the crypto ecosystem. So it's going to be a fascinating time to watch. I think the traditional asset networks would definitely modernize over a period of time. The quality of assets, etc., are not a question there. It's more about transformation there. Versus, I think in the new entrance plan, it's going to be self-governance versus what are you going to do to manage quality. There's a lot of automation and I think transparency that smart contracts and DeFi bring. So, some parts are automatically addressed because of transparency around ownership and the quality of the assets. So that's why immediately you see things like minus the software bugs and everything else, staking and yield farming, etc., working relatively quickly, right? So relatively quickly, and lending and everything else working relatively smoothly because there is that transparency and automation that smart contracts bring. But what happens when you try to bring on tokens representing physical assets in the real world? So you need a governance, you need a specialist function to take care of the underlying assets and automatically say, the underlying assets is in a good shape. So now how do you govern that? Because if I have to own a piece of a Formula One car from last year, how do I know that car is, and I'm a fan. I'm a Formula One car fan. I'm a Formula One fan. I don't mind owning a piece of kit there, but then, how do I get? So that's the self-governing structure, and you need to sort of, I think, get that in place. And I don't think there are straight answers there. And as with everything else, we'll all iterate and improve.
Rajeev, I think it's an exciting view of where we're going. I mean, with that view in mind, who do you think the winners and losers will be?
It's very hard to say, right? So some of the large financial institutions have survived hundreds of years, right? So one thing is that the mature financial institutions will come in and adopt a new tech after the frenzier period is over, right? After the frenzy is lost, when there is a maturity there, and then the adoption will happen. That's what's going to happen on the financial market infrastructure and the incumbents in the capital market space. But one thing is for sure, right? All of the entities that we can term as losing will have one defining attribute about them. That is, they will not, they are the ones that are either too late to adapt and adopt, or they decide there is no need to change, right? So
Right.
that will. And one thing that I keep telling to myself as well, right? Functions will not be irrelevant. Functions will always be relevant. How you perform those functions is what's going to change because of tokenization and DLT, right? So you need a different kind of expertise to perform the same function. You cannot perform the same function in another way. And the organizations that actually have, most organizations, I believe, have already realized that now it's about execution, right? How do I perform the same function with a different kind of expertise? And that is a change. And we all know change, while it is the only thing that is constant, but it is the only thing that is consistently hard. And that's where I think the success and the failure of organizations will emanate from.
Good. I think that's a good kind of segue into the kind of, why don't we talk a little bit about, your experience driving digital asset adoption, specifically at, HSBC. I mean, how difficult has it been to get buy-in from, what is one of the largest financial organizations in the world?
Yeah, correct. Right. So it all starts about how do you want to frame the opportunity, right? What is the threat and what is the opportunity? So and that's where it starts, right? And in larger organizations like ourselves, I don't think you start off with threats and opportunities, right? So it's not going to basically work that way at all. You have to start with engagement. And that's how you begin, right? And you spend some time engagement and education, the two E's that are very important in large organizations. Is don't get into why should we be doing it, and start off with what is it, and that is the two E's, right? So educate and engage. And then we can get into why we should be doing it, and the opportunity and the threat sort of address why we should be doing that, and thereon, right? And this takes, you got to give it some time, because it goes from different business units, and immediately one of the other things is you need to find, there will be friends and allies in different business units of a large group thinking along the same lines. So and the education and engagement phase will bring out like-minded working group partners, alliances, and then you realize that, especially for a large organization, you will realize that there will be some anchor products that absolutely needed, because they are the ones under probably significant threat or opportunity, right? They have significant threat or opportunity. And this is where the expertise of how you perform a function is going to greatly differ. And I would pick for digital assets custody, right? Custody as a function, I don't think is going away anywhere. But how you perform, you need a different kind of expertise to deal with, custody of digital assets than the traditional world. So sort of make that as an anchor, and then you build your products on top of it. So, and that's been the journey. And what I've just told you in a very generic terms is what has happened at HSBC, right? And then you start off with some POCs, you educate, and that started up for us in 2016, 2017. And the more you keep yourself informed, you can speak really well about these aspects with your clients, and the clients express some interest, and then you can sort of piece together some consortiums, and maybe some collaborative work like the one that we did with SGX and Temasek, and it continuously proves your capability and credibility in the organization as well. And then then you move along the curve, right? So the buy-ins come in. The curve also gets steeper, right? It never gets easier, and then the organization, comes along for the journey.
You mentioned a couple of times the POCs and
yep.
Can you talk to that a little bit? What you've done in the POC space?
Yeah, I mean, very early on, we started off with proof of concepts as to, can this tech actually survive in enterprise, right? And then we did bit of work did a bit of work on Ethereum public blockchain to just see if we can do proxy voting kind of services, right? We always have use cases. It's very easy to get use cases for distributed ledgers in financial services organizations. So you sort of get through some POCs. Again, these are also the POCs have to be seen as learning experience, right? Capability building exercises within the organization, and then you go out and start off and then you showcase this capability. Then you basically get into parallel production world where you can do that, and then we have now a system called Digital Vault where we digitize the age-old paper. There are still paper-backed private assets, so we sort of bring that into a DLT world and try to sort of make it easier or improve customer experience through the usage of DLT, right? Very innocuous use cases, if I may say so. And then can you then extend into representing these assets as tokens? And that's where we are potentially headed. And what does it take for our business to manage assets represented as tokens? So that is the journey that we are on, right? But we wouldn't be here if we had not done that capability building exercises that are called POCs and POVs, etc. So yeah.
We had, as you probably aware, we had Kevin Lynch from Temasek on last week, and 2 weeks ago, and he spoke a little bit about MarketNode. Can you talk about your involvement with that as well?
Yeah, I think it ties back to the collaboration that we had with SGX and Temasek, back in 2019. It started out as us trying to answer the exam question of, at the national market infrastructure level, can you actually tokenize fixed income securities that are already there, and what kind of efficiencies do you get? Are there how do the commercial opportunities look like that if the technology proves worthwhile? And that was the exam question that we were trying to answer. We did not, so then it started as a collaboration project between us, Temasek, and of course SGX. And the results were so promising that SGX and Temasek now have a venture, a market, called JV to sort of commercialize those opportunities. And recently they have then gone out and signed an MOU with about 10 financial institutions to collaborate on different work streams, right? So it's no longer a single work stream. It is multiple work streams, and still happy to say that we continue to collaborate with them.
Interesting. So we're getting close to the end, so why don't we just wrap up with a couple of questions? How, looking at this space, how do you create optionality for a firm like HSBC in a fast-moving market such as this?
Yeah, so it's a fantastic question. It's something that I grapple with all the time, right? So you can't basically, the traditional way of a large organization dealing with change is not suited for fast-paced changes as well sometimes, right? So we tend to optimize a lot before we start to execute, in the sense of how an organization deals with changes. We optimize. We do a lot of upstream work before we try to sort of build something else. Fast-moving changes means we have to execute and optimize, and that execution basically is not a single stream, unfortunately, right? You can't basically focus on. So you need to sort of sow different seeds, look at which is sprouting, and then sort of optimize, and then learn from that experience, and sort of then optimize. And that's the approach, I think. So that is the optionality. I don't think we can bet our farm on one type of DLT tech or one type of approach. It's going to be several different types. And honestly, it is the capability to do things quickly and then optimizing it as they scale is the need of the hour. And this is what I feel as we basically start, or this is the challenge, right? And then execute. But this is the dichotomy. I think fast moving changes. I'm not saying this is very specific to the digital assets or the DeFi world, but it is so fast. Things change so fast that if you try to optimize and waste 6 months, things that you're optimizing for are no longer existing after 6 months.
I think DeFi 2.0 came out a couple of weeks ago. Now we're talking DeFi 3.0. So yeah, absolutely.
Yeah.
So in wrapping things up, Rajeev, what's next for you and HSBC?
I think we'll continue to ramp up our efforts, and in terms of HSBC, I think custody, I think, will continue to be our anchor product, and we will build our services on top of it. And there is no doubt that we absolutely believe in the transformative potential of tokenization, asset representation as software, right? So, a lot of people talk tokenization as something new, but it's simply using a lot more software to represent assets and standardizing that, asset representation. So we have absolutely no doubt in its potential. I think the firms, having people like myself and my team out there to sort of, chart the path ahead. So, I think we'll continue to work and ramp up and transform. Again, we are all there to sort of end of day. It's the customers that we serve for. We see a lot of interest from there. These services being delivered efficiently and at scale is what we will work towards.
That's fantastic. Well, Rajeev, this has been a real pleasure. Thank you for your time today. Anything else you'd like to comment on to wrap things up?
No, thanks a lot for having me. I had a blast speaking to you, and thank you. And I also noted that it is the 25th episode, so congratulations on that.
Thanks for
one more to go, right?
Marking that milestone.
For a year. Yeah.
Exactly. Well, thanks again, Rajeev, and we'll see you soon. And our next METACO Talks, as usual, will be in 2 weeks' time. Until then, wishing you all a great weekend, and stay informed at metaco.com/talks. Thanks. Bye.
Thank you.